Apple in the red as well. Report that Chinese regulators are considering whether to open a formal probe into App Store fees. It's pairing its declines, though. It's down about 1%. Are these warning signs of bigger issues in the tech space? Let's ask Jeremy Bryan. He's a portfolio manager at Gradient Investments, and Scott Nations is president at Nations Indexes. Jeremy, you got any thought? I know Alphabet must be at least a near-term disappointment. What are you doing here with the shares?
Oh, we're not selling a dime. In fact, we'd be likely to be buying more. You know, I know that there was a little bit of disappointment with regard to the cloud spend and the cloud revenue that came in, and the CapEx number was certainly bigger than we had anticipated. I didn't think they would up Zuckerberg from 65 billion going to 75 billion. But, you know, from the side of what we're actually in this stock for, nothing changed. So from our side, this is getting a little bit cheaper. It's already been a relatively cheap stock compared to its other universe. We like this name. We're not trading the share right now.
Scott, what would you add on that?
Well, earnings are always important, but guidance in these AI names has become just absolutely critical. Because let's face it, if you're paying for growth, you don't really care what Google did last quarter. You're all consumed with how they're going to change the world in the coming quarter. And the problem for both Google and AMD is that guidance was disappointing. For AMD, it seems that nobody is spending money, at least on data centers. So a stock that was already down 17%, down another 7% today. Google has a very different problem. Guidance was also bad. But again, 75 billion versus expectations of about 60 billion. That's a shock for Wall Street. And the interesting thing between these two is that AMD seems to be getting hurt because nobody is spending money. And Google is getting hurt because it's spending a ton of money.
Well, now, wait a minute. We also, Scott, have NVIDIA up today. This, to me, smells a little bit more like NVIDIA is winning and AMD is struggling at the time when there's this gold rush to, you know, big investment spend. And their shares were already down, what, 33% over the past year?
Well, and the problem for NVIDIA is it's nearly in bear market territory. So maybe up a little bit today.
I meant
thanks
AMD.
to AMD's weakness, but it's still down a bunch.
Right. AMD is down, I think, you know, significantly over the past year, while NVIDIA is up even today. So if that was a read-through to the whole industry, you'd think, well, then they're selling off. Instead, Jeremy, it seems like they're sitting in the prime position here.
Yeah, I think the market's picking a winner. Right. And they're saying that NVIDIA, if 75 billion is accurate, again, because these are guidance and forecasts, and we've seen this movie before, right, is that Mark Zuckerberg during the metaverse area couldn't talk about enough how much CapEx they were going to spend. And then once it started to get hit into the stock, boy, that number changed really fast. And so those numbers are just guidance numbers that, hey, what we could expect. Those numbers could get, if DeepSeek ends up being something where there's efficiencies to be made, those numbers, the CapEx numbers, are going to come down pretty fast. So I think from NVIDIA, AMD point of view, I think they're just picking a winner and saying AMD is not gaining share against NVIDIA. NVIDIA is maintaining a lead, and the companies that are buying those chips are still saying they're buying them.